Well, hello, and welcome to the Legacy Insights Podcast. And I am your host, Moving Money Mike. And I got to tell you, it just gets better and better. We're gonna have an awesome show tonight. Tonight, we're going to be covering episode number 13, the 10 shocking best kept retirement secrets that you need. Let's jump right into the show. I'm your host, Moving Money Mike. This is the Legacy Insights Podcast. Hit that subscribe button, hit that like, leave a comment, tell us what you like about the show, what we else you'd like to know, to hear about topics, all that. But we're going to be covering entrepreneurship, financial strategies, guiding to your goals and dreams. We simply put, we're here to help you get your mind and your money right. We're going to be having tips, tricks, topics, business leaders, interviews, telling their stories about who they are, where they came from, their struggles, and how that you can apply that to your life so that you can be a better informed individual and entrepreneur, making sure that you can get your legacy together. I want you to consider some things, and I brought them up before. What good is life without health? What good is health without wealth? And what good is wealth without a lifestyle? See, what good is a lifestyle without a legacy? These are some serious questions that you need to consider in your journey, right? We're going to revisit all those topics. We're going to make sure that you have a good understanding of what it is that you could be addressing, how you can get these questions answered for yourself, and then apply some actionable strategies to get to your goals and dreams. Right. So my goal is to assist you in becoming, and that is a better individual, a better informed entrepreneur to help you set you financially free. So it's time to let's get smarter. Again, tonight's episode 13 is going to be covering the 10 financial fixed index annuity retirement strategies that you should get started right away. Now, in this strategy, we have some tools and strategies that we like to apply, right? So that you can put them to use right away. So I'm going to share with you the financial needs analysis. There's 6 steps to financial independence. Okay, so I need you guys out there, like when I'm saying I'm talking about a topic, I'm going to be dropping some nuggets. So you need to have your pens and paper ready, right, to take these things down so that you can do some further research and investigation, and then check back in with me, right, to let me know how it's working for you, right? So the first strategy and the first step is cash flow. Okay, so in the 6 pillars we talked about elevate. That was the second pillar, right? You've got to upskill and add some cash flow to your portfolio. So we need to have that additional income, right? So that's what we help you do in with our show and our strategies within the company. And then we help you to manage those expenses, right? So you got to have inflow and outflow. So let me talk about that, right? If you have um, inflow and you have a problem with your outflow and you don't manage your overhead, you're going to be in a problem, a serious problem, right? So there you go. That's a formula for you right there, right? When you have inflow and you don't manage your outflow and you have some overhead expenses, that's a serious problem that you're going to have. So we're going to get jumping into that a little bit more a little later as well. So the second step in the financial 6 steps to independence is debt management. Okay, we help you to consolidate that debt, and we help you to strive to eliminate the debt. So first step is getting some more income coming in. You got to upskill. Then you got to manage the debt, right? You can help you consolidate it, right? So what we'll talk about is, sometimes people like to go out and get interest free cards for a certain period of months, 6 months, 12 months, and transfer the debt over, right? And I told you in the last episode, I spoke with a gentleman about doing that. It depends. It really does depend on what it is that and how it is that you're doing. How much debt are you transferring over? How much can you alleviate paying out that APR, those extra percentage points in dollars, right? 'Cause that's what it boils down to, dollars and cents. Um, how much can you delay paying out by moving it over to an interest-free card? But the key is being able to pay it off before that time runs out. And most time people forget about that. So we're going to keep it moving, right? So we help you to consolidate that debt and strive to eliminate it. So there's those strategies of using credit cards, but we also sit down with you and help you to find extra income, right? So that you can pay more to consolidate and strive to eliminate that debt. Then we help you on step 3 to build wealth. So first of all, when you're building wealth, you got to consider two things very important. You got to strive to outpace inflation. So whatever that inflation rate is, when you're building wealth, you got to know that whatever wherever you have your money parked, right, and in investment vehicles, it's got to be higher than the inflation. Because if it's not higher than the inflation, you're losing at the money game. Then you got to reduce your taxes, right? We had a great, awesome tax mitigation webinar a week ago. I said I was going to get you those notes. I'm still working on it. But we're going to be talking about taxes. We're going to have some diagrams and some notes to share with you when it comes to that, right? And some and references, right? Some people and some calls to action there. Okay, but reducing those taxes is the quickest way to get a raise, if you will. Then the fourth step is to preserve that wealth, right? So you're going to get some more cash flow coming in, reduce your debt, and then start building wealth. And then you got to start to preserve it, right? You got to preserve it. So as you build it, right, you got to. That's the guard in the legacy pillars of a framework, right? You got to guard it. You got to preserve it, right? So how do you do that? You got to reduce taxation and then build that family legacy by putting tools and strategies in place that help it to stay intact. That's one of the strategies I'm going to be sharing with you tonight in the fixed index annuities. Those ten advantages that we spoke about, right? And the 10 secrets, best kept secrets, right? Then you got to have proper protection. Proper protection in that fifth step that we help you with is the key foundation to building a legacy. Okay, I shared with you last week or so that that's speaking with a young man, single income household, and you know, if something, I discussed with him, if something were to happen to him, how would his family live, and without that income? And it was a realization for him, right? So you gotta have proper protection, and insurance is the foundation of that. A lot of people don't want to hear that because they say, "Oh, I don't believe in it." Well, believe it. It's not a religion. It's math. It's a basic math question, right? It's the equation. But you want to preserve the money, right? So it's not a matter of belief. It's not a religion. It's not a cult, right? It's just basic math, right? That says that your family will be able to survive, in the event of some tragic accident, all right, or mishap in life, right? So for those of you that don't have children and you say I don't need life insurance, well, why would it be anybody else's responsibility to do a GoFundMe page for you, right? That's not responsible, and for the men, right? We want to stand on all 10, right? And be responsible. So there you go. So like whether you're a family man or a woman, right? Insurance is the foundation to preserving proper protection. So now that protects against loss of income, as I just said, and protecting your assets, right? So if you're a family individual, you have a spouse, you have a life partner, guess what? You don't want to leave them holding the bag, right? Then last but not least, emergency fund. We help people with an emergency fund, right? You know, um, the industry says, 3 to 6 months. But guess what? We came out of a pandemic, y'all, right? That was really tough, right? So, speaking about pandemic, guess what? People, were unfortunately getting sick, chronic illnesses, and passing away, right? A lot of them didn't have insurance because they were hit with the next pandemic, with that passing pandemic. And the next pandemic that may be coming may even be polio, something that we eradicated over 40 years ago, 50 years ago, right? And with the current administration cutting back on health policies, you know, y- you don't know. Like I said, this is not a political show, but it is definitely an economic and mindset environment here, right? So protecting yourself and have an emergency fund of at least, the industry says, 3 to 6 months. I say, because of the past pandemic, at least 12 months, at least 12, 16 months, man. 18 months, year and a half worth of expenses put away, right? It's doable, right? You just have to be consistent, dedicated, and committed to that goal. So here, and you got to prepare for the unexpected. So I just wanted to touch on that really quick, and I wanted to transition from these 6 financial steps over to the wealth creation formula. Right? You said, "All right, Michael, that sounds all real good, but how do I get that done?" Well, there's a formula for that, right? That formula is basically this: money plus time, right? Money plus time, because there's no such thing as get rich. I tell you all the time, don't listen to those gurus talk about one hit wonders. And you can take this out here and flip it. Like, come on, man, you better watch out, right? It's time plus money plus or minus the rate of return, right? Because you got to have that working for you, the compounding interest working for you, not against you. We're going to get into that as well. Minus taxes, minus inflation equals wealth. So let me run that again. You need time plus money. You have plus or minus the tax, the rate of return. Then you got to have minus taxation and minus inflation. So you got to have money, time, building it at a positive rate of return, right? Higher than the inflation rate, so that it's making money. And then you got to minus the taxes and minus the inflation, so that you know exactly what the bottom line is, what that wealth is, and what you're worth, right? So that's some really good stuff right there to have in your pocket. So I hope you got that. If you got to go back and listen to it again, please do, right? But that's where we are. Okay, so continuing. So I told you tonight's show is about the 10 advantages of the financial fixed index annuity, and some of the best kept retirement secrets that you need to know. And this is a fixed index annuity. And you said, well, Michael, what is a fixed index annuity? And I'm going to give you the textbook definition of what of what it is. Right, a fixed index annuity is a long-term tax deferred insurance product that provides principal protection from market losses while offering the potential for growth based on performance of a stock market index. Okay, so you hear that, right? So what that basically says, so I can break that down for you, is that it's a long-term vehicle, right? So there's no putting it in there and pulling it back out, right? You're going to commit to putting some money away for 10, 20, 30 years, right? Because you're going to find out why in a second, right? And it's tied to the stock market, such as the S&P 500. Okay, so it has the potential to go up, but because it's an index product, it actually gets to that height and it locks in. Okay, so that's the magic right there. That's the magic bean right there. It locks in, man. Right. So you're talking about being able to get all the benefits up the upside potential of the markets, but none of the downside risk. That's part of that with a fixed index product. So key features include guaranteed interest rate floor, never less than 0%. What does that mean? That means, so if the market goes up, it locks in, but if the market comes down, you don't get any losses, right? And even if it goes negative of zero, guess what? You don't take any of that loss because the floor is zero. You don't lose anything. So that's powerful. A fixed rate account. So that means basically it locks in at that rate, and the ability to choose various market index options with caps, right? So basically the reason why they give you the 0% floor is because they're going to give you a cap, right? Because if it goes above the cap, now the company makes money. But it stays between zero and the cap that you get, right? It's all yours. But if it goes above that, it's theirs. That piece that goes above theirs, above that cap, belongs to the company, right? And so they give you some conservative winning numbers so that you can consistently make money, but also know that over the long haul, because it's a long-term product, they're going to be able to get interest above the cap so that they're constantly making money and staying in business. So let's keep this going. Those participation rates, that's what we're talking about here, or spreads that limit upside potential in exchange for the downside protection. I just explained that. Okay. Fixed index annuities offer a balance between fixed annuities and variable annuities, providing more growth potential than a fixed annuity, but with less risk than a variable one. So, as again, there's a benefit to being in a fixed product because guess what? You're going to benefit between zero and the cap, whatever that contract says at the time, but you get the fluctuation over time, and you're making money, but you don't get any of the risk of market loss when it goes south. Right? So that is in a variable market. So we're going to talk about the differences between fixed and variable. Well, I mean, you pretty much know what a variable product is because it's the stock market, right? It goes up on Monday, it comes down on Tuesday, right? But what most people don't account for is the loss of the markets on Tuesday, right? It's always going up on money, looking real good, get you tapping that money out, right? It then comes, Tuesday, and the market starts to say, "Hey, listen, I'm not feeling like it today. I just think I'm going to take a rest." And there goes your money, the rest of your money, when it takes a rest, right? So, how does a fixed annuity work? It's just like this. There's a couple of topics within how it works. We're going to touch on them. Well, it's tax deferred growth. So what does that mean? Right? It means that you don't pay taxes on the interest earned until you withdraw your money. Just that simple. Okay. It's tax deferred. It allows you to grow in this vehicle without having to pay on anything until you really want to use it until it matures, and then you'll have to pay on that. But then it has principal protection. So that's your initial investment is protected against market downturns, right? So use a little bit of jargon there, right? Protect against market downturns. Basically, that what means is when the market takes a rest, your money doesn't go with it too. The rest of your money goes too, right? So your money is not directly invested in the market, so it cannot lose money when the index fall. So that takes a lot more technical explaining where it's not directly there, right? It's in vehicles, but it's not. And they, the Wall Street guys kind of handle that part of it, right? But it's just know that there's principal protection inside the fixed index annuity, so that it guarantees that it will grow and mature, so that it provides you the stated contract returns. Okay, so it has interest rate guarantees. They basically have a fixed guarantee rate of return anywhere between 6 and 8% with a 0% floor. The one of the things that it has is limitations on growth, right? Because it has the downside protection. I already talked about that. The growth is limited by the cap. Listen, right? They've got to make money. Everybody's got to make money. That's where everybody can be happy, and that's mutually beneficial, right? If I'm going to give you $100,000, right, over the next 10 years, I want to be able to collect $30,000 what after it matures every year, right? Until I, the creator calls me home. So if I give you 100 and you're going to give me 30 back every year, right, as a retirement payout, right? How many years do I have to continue living after that product matures for me to get my money back, right? So 30 times 3 is 90. So if you live 4 years after it matures, right, that's $120,000. You made 20 grand, right? And then every year after that, it's just butter in the bank, right? So that's the power of these fixed index annuities and how they can provide lifetime income over a period of time. So and don't get locked in on the money I just told you, because it depends on the product, depends on the rate, it depends on what the contract is at the time. I just use $100,000 and $30,000 payout as an example as to how the products actually work. Okay, so just bear with me here, stay with me. All right, so um, it's potential for income. I just talked about that. At the end of the accumulation phase, that 10, 20, 30 year product that you've participated in, you can convert to an annuity into a series of income payments for your retirement, right? This is smart money moves, right? This is why I say this is moving money, Mike. I'm talking about getting your money and your mind right now. This is what these products and services do, and that's what I promised you I would bring to you in a simple, laid out way that you could understand it, so that now you can start doing some research, touching base with your financial advisor, your and your financial specialist, or even reaching out to me, right, so that I can help you get your legacy intact, because that's what this show is all about. Let's keep it moving. Okay, so who might a fixed index annuity be right for? Well, risk adverse investors, right? Let's do a little terminology here, right? Investors who are comfortable with some uncertainty, prioritizing principal protection. Okay, so that means they can actually get involved with the fixed index annuity because they're comfortable with some uncertainty, right? They and know that at least they're going to get paid a return on their investment in themselves. So that's huge, right, for people. And then if a fixed index annuity enough is not aggressive enough, they can go over to the variable products, right, where there's no floor, right? And there's no cap, right? But believe me, if you're young, you're making income, you got the time and the money, right? I just talked about that in the wealth creation formula, right? If you got the time on your side, the money working for you, where you could afford to invest and have some risk, it could be the best thing that's for you, right? But it depends on the individual. That's why you have to talk with a financial specialist like myself and my colleagues, so that we know what is the best vehicle for you going forward. So that's what we're talking about here. All right, retirement income. Who this might be good for, right? Individuals seeking tax deferred growth to build savings and convert into a steady stream of income. Talked about that lifetime income. If I could put away 100,000 in an example, right, and know that after 10 years, 15 years, 20 years, I'm gonna get 20 to 30,000 dollars back. Now all I gotta live for is another 5 to 10, 5 to 4 years, 4 or 5 years to get my money back, plus the additional year's annual income that comes my way, right? To supplement my social security, my other investments, my real estate, my the rental properties, my 401ks, these other products and services that you have. So you have to have a diversified portfolio, right? Unless you have $500,000. I'm talking to those people out there who have been saving already and thinking about, hey, what can I do to provide myself some certain amount of security. So if you've got 500,000, $1 million, and you want to roll that over into something that is going to be beneficial to you, I would definitely look at fixed index annuities, and like in episode 12, index universal life policies, where there in with these policies here. the fixed index annuities, there's no uh, 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 deposit limit. You know you can put in as much as you want, right? So there's excuse me. There's market diversification, meaning that they're looking at alternative in traditional investments, offering more growth potential than a CD, but with less risk than a stock market investment. So you have that. They'll have those options. Okay. So, but there are some trade-offs, right? You know, there's some pros and cons. I gave you a little bit of who it might be for, but the trade-off with that is you have limited upside potential, talking about the cap, reduced liquidity, right? And so what does that mean? Because you're locking it in. You're locking it in for a period of time, right? This is a fixed product for a period of time that's going to guarantee you lifetime income in the fixed index annuity based on the amount of money that you've invested in yourself and your future. It has to stay there. And so you just, if you pull it out, there are going to be some fees attached to it, right? And you know, it's pay to play. That's just how it works. It's just pay to play, right? And there's some complexity to it. The variations create crediting method, caps, participation rates, spreads can make FIAs complex, requiring a thorough understanding of the contract. Again, you wouldn't go take a driver's test without reading the manual. Some people even go, most people go and get a driving instructor, right? That's who we are. As a financial specialist, my job, my responsibility to you as a fiduciary is to make sure that you understand the products and services that are in front of you, your options that are going to help you get from where you are to where you're going. Simply put, right? You want to have a thorough understanding of the contract. So, those some of the things that I just want to touch base on. The 6 steps to financial independence, huge, huge, right? If you didn't get those, we're going to recap those 6 steps in the wealth formula before we close out today. But if you're here inside of my voice today, we're covering the 10 shocking best kept secrets for retirement that you need. Is the fixed index annuity, the 10 advantages we're going to about to cover right now. So go to Legacy Insights Podcast on YouTube, hit that subscribe button, scan that QR code. It's going to take you over to a financial presentation. It's going to allow you to learn some things about the different vehicles, the different strategies. You're going to learn some things. You're going to confirm some things that you already know. You're going to be able to do some interactive involvement in that overview, right? It's really cool. You need to check it out. So go to scan that QR code, put your name and email in there, get registered to take that financial overview. Hit that like, hit that subscribe button, and you know we're going to keep this knowledge going and dropping for you. So we're going to jump right into the 10 advantages of the FIA. All right, the fixed index annuity. So we talked about the most important part of a fixed index annuity is the guaranteed lifetime income, right? Uh, you can never outlive it, right? So here we go. You got $100,000, right? Well, just start out with those, no matter where you are, right? Because this is for everybody. $5,000, I believe, is the minimum annuity you can start. I believe that's the minimum, $5,000 to $7,000. I believe it's fine. So anywhere between $5,000 and $7,000, 100,000, $500,000, right? You can set up a fixed index annuity and get lifetime income from it, right? That's awesome. That's awesome. You could do that, right? So these are your options. You could protect your principal in down markets by having it locked into one of these products, right? There's different products from different companies. When you were reach out to me and we sit down and discuss your strategies, we'll look at a couple of different companies. There's quite a few out there, right? This show is not about promoting companies on while we're talking because of what is called compliance issues, right? Nobody pays me. I don't. I'm a broker dealer. Okay. I'm a licensed broker dealer, so I work for you, the client. I do not work for the companies. I'm independent. So that's one of the great things about what I do, right? I have no preferences to any company to make, to make them money. My job, my responsibility is to you, the client, the customer, the mother, the father, the married individual, the business owner, to make sure that your money moves are correct for your goals and your dreams. That's it. That's what I do, and that's why I'm putting this out here, because this is the mission of the show. The mission of the show is to provide insight to financial strategies for individuals and entrepreneurs to get to their legacies and their goals and dreams. That's it, right? So my goal is to be that resource. Okay, so the second principle, the second advantage was protecting yourself in down markets. Number three advantage was unlimited upside potential in markets and locking in your gain. So, meaning unlimited upside potential comes with a cap, right? So that means over the lifetime of this product and strategy, you're constantly going to be gaining. Okay, if you can get, if the cap is 8 to 10%, all right, that's huge, right? I don't have an example in front of me, so I explained the rule of 72. The power of compounding interest. $10,000 at with a 10% interest rate doubles every 7.2 years. So every seven and a half, say 7.5 years, for example, their $10,000 investment would jump to 20, from 20 to 40, from 40 to 80 every 7.2 years, right? That is huge. So if you're 29 years old with $10,000 getting 10%, right? You're getting almost 350,000. No, I'm sorry. Is it 300 or 600,000? It's something like that. Right? The numbers I can't remember. I'm trying to remember the example that I use all the time, right? But that is the power of compounding interest, right? I don't want to misstate my math. I like to have all my notes in front of me, right? But that is the power of compounding interest. It just keeps doubling for you, right? And it starts out slow, but as time works for you, the earlier you get started, that's called the time value of money. As it works for you going out, right, it becomes better, right, and more lucrative, right? So then, opportunity and advantage number four: receive a big bonus towards your future income. A lot of these fixed index annuity companies, they throw 20, 40, 50% bonus on the back end of that product. So if you put in 100% and it's 20, a 20% bonus, they put another 20,000 on the back end after that product matures, right? We were working with one company that had a 50% bonus. So no matter what you dropped in there, 100, 200,000, you're getting half of that on the back end after that product matures. Are you kidding me? Phenomenal, phenomenal growth strategies here. Tap in with me. Hit that subscribe button, right? You tap in with me. Send me a message. You want to learn more? I got more information for you, right? I can get you to access to these companies and these strategies that are personalized to you so that you can get your mind and your money right. That's what this show is all about. All right, listen. Um, Opportunity number five, right? Advantage number five: opportunities to increase and guarantee your lifetime income each year. So as that time passes, they're allowing your contribution limits to continue to grow, right? Putting more money into it. Double number six, double your guaranteed lifetime income if you have a chronic illness. So there's riders that are attached to these. So that if something were to happen to you, or within that provision of the rider, right, it automatically doubles, right? So that you can have more money for your health expenses. That's awesome. That is awesome, right? Number 7 advantage, enhanced death benefit in case of premature death. Now, no one likes to talk about it. And I say this, not jokingly, but not even Jesus Christ got out alive, right? Um, it just it's just part of the natural cycle of life. It's just what happens. Some of us pass away, and I've shared with you, and if I haven't, you know, our youngest son, 23 years old, passed away 3 years ago in the prime of his life. Premature death. It happens. It happens. Be prepared. Be protected. Protect your family. Protect your loved ones. That's what this show is about. Being prepared, building your legacy, right? It's not always about money. It's also about what are you leaving behind? How would you like to be remembered as that person who cared about your loved ones, who was always there for them, right? Who may not be, how can I put it? You know, when it comes to us guys, we say we love you in different ways, right? Women are much better at that, right? They can, they hug you, snuggle up on you, all that nice stuff, right? With us guys, we know I'm a guy, right? And so, my love comes out in the form of how I do with you, right? And how I try to push you, how I try to stand behind you. I might give you the razz, I mean, I'm a guy, right? But I'm doing it because I love you, right? And this is one of those things that when you do it and you do it right, you're showing that you love your family. All right. I'm talking to you guys out there. Right. So it has the enhanced death benefit in case of premature death. You want to be able to protect your family because it happens. Number 8 advantage, defer taxes on the gains. Hey, Uncle Sam can wait for his, right? Listen, I just said the quickest way to get a raise is to reduce your taxable income, right? That's what you want to do. I mean, I can't say it enough. Reduce your taxable income and or defer it to a later time. It allows you to grow some money, right? In this fixed index annuity so that you'll have more of it later, right? You got to get ready for whatever's coming down the pike. This administration and any future administrations are always changing the tax codes, right? That's how they fuel this country. You and I are not only the human ATMs of our life, but we're the cash cow for the country. So the more money we make, the more money they take. It's just what it is. But there's two types of taxes in this country. There's one for the working man, which is the worst taxes, and then there's the taxes for the business owners. And we're going to touch on that too. If you do not have a business, you need to get one. We're going to touch on that too, right? But deferring taxes on the gains, right? That's how you create wealth. It bypasses probate. Well, they're going to take a look at it, just like I said back in episode 12 about the IUL, right? It bypasses probate, right? But they will take a look at this fixed index annuity and say, hey, well, this is compliant, and like, guess what? We can't touch it because it's not one of those assets that is that it could be tapped into. Okay. Number 10. Okay. All of the above without any fees. Everybody's talking about fees, right? Um, there aren't any when it comes to these. There's a fixed index annuity. There are no fees. And if there are some fees attached to the ones that you have, maybe you should just roll your money into something else. Change up companies. Guess what? It's your money. And if your financial advisor or your financial person isn't working on your behalf, fire them. Fire them. I'm not telling you that you should just do that to them outright, but give them an opportunity to get it right. Like, hey, listen, I need to know what's happening with my money, right? So if you're not doing the right thing with it here, right? You need to fix that. And if you can't fix that, I'm gonna get somebody who can, right? I mean, you just don't want to go out and fire them because, like, you want to give them a chance, right? Right? But But if they don't get it right quick enough, hey, you know, it's your money. Be a steward of your money. Okay. So what's the catch right here? What's the biggest catch? Right? You have to qualify, right? These types of products and services, you know, aren't for the faint of heart. You've got to qualify for this. So you got to make sure that you have enough money coming in so that you do not have to uh, take an early withdrawal or cash out, right? Because it's a long-term vehicle. And then if you do have to do that, take it out, they're going to tax you, man. They're going to tax you pretty heavy too, right? So you got to qualify, meaning that you have to have enough income. You cover your expenses, your living, your lifestyle. You got to have bank accounts. You got to have, it doesn't have anything to do with your credit score, right? But it does have to have enough income coming in so that they know that the money that you're putting away is going to stay away, right? Because it's designed as a long-term vehicle so that you can get your mind and your money right over time. Because time plus money, right, minus plus your interest rate, plus or minus your interest rate, minus taxes, minus inflation equals your wealth, right? Equals your wealth going up. That's what's happening. You got to always be going up. All right. So tonight's show was really all about the 10 best kept retirement secrets that you needed. And there you have it, the 10 advantages of a fixed index annuity, right? Guaranteed lifetime protection, unlimited upside, receive big bonuses, opportunities to increase the income each year, double your guarantee in case of death, chronic illness, enhanced benefits, deferred taxes on the gains, bypasses probate, and all of the above without any fees. Man, you can't get any better than that, right? If it's free, it's for me. I'll take three. That's what they tell me. That's what I tell them all the time, right? If it's free, it's for me. I'll take three. So, final thoughts. Go to the Legacy Insights podcast, hit that subscribe button, scan that QR code, take that financial assessment, get that information, man. Take these nuggets, apply them right now, right today. Go back to previous episodes in the podcast series, right? Listen to the six pillars of the legacy framework. Understand why you must learn, elevate, guard, align, um, uh, 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 what is it, change, and find out this why it's all up to you to get it right. Okay, so call to action. Review your financial plan. Get in touch with your financial advisor. Reach out to me through the email. Go to the website, Michael Lewis, financialspecialist.com. Send me a message. Check out the videos. You know, share this episode with your friends and family, right? Share it with them because guess what? This is the life changing information they're not giving you. They're not giving this away, right? People are trying to sell it to you like for real. No, 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 no. Right. And if they only got one company that they work for, find somebody like myself, like my colleagues who are a broker dealer setup, an arrangement with over 100 plus companies that can custom fit your goals and your dreams, right? One size does not fit all, right? That would be terrible if you needed a set of tires, right? Are you going to put a pair of snow tires on a Ferrari? No, you're not. No. Are you going to put Ferrari tires on a VW Bug? No, you're not. You're not going to put those Fujis on a hoopty, right? You're not going to do it. You're just not going to do it, right? So you know where I'm coming from, right? It's just a matter of common sense. Get what you need. Find out what listen to these episodes so that you can get what you need, right? I'm your host, Moving Money Mike. Again, subscribe, hit the like button, leave some comments down there about the show, what you like, what your thoughts are, what you want to hear more of. right? That's what we're here to do. Okay. And again, I want to thank you so much for the privilege of your time. I am your host, Moving Money Mike. I'm looking to see what episode I'm going to be dropping next week, right? There's so much information, but I'm going to shoot it out. I'm going to shoot it out there. Look for me on all social media platforms: Facebook, TikTok, Instagram, um, X. Look for me. I'm going to be putting out even more content, all right? Updating some things. You know what? This is a grow show, right? Not only am I putting this content out there, I'm growing. I'm learning as I'm doing this, as I'm learning about all the different venues and all the different ways to reach out to people to share this awesome information. Go along with me for the ride. All right. Again, I'm your host, Moving Money Mike, and we're out. Thank you very much for your time.